Good morning, everyone. Welcome to our Chamber of Commerce webinar with Richmond Council on the financials, effectively. So the performance in 2023, as well as the budgeting going forward. It will be a riveting seminar and enable us to have insights into all the decision making and prioritisation within the council, which is really useful for the business community. So we look forward to hearing from two senior financial executives within Richmond Council. Catherine Burston, she's Assistant Director of Financial Management, and Alex Wilson, who is Assistant Director Revenue Services from the financial services perspective. So we have two extremely senior people to guide us through the progress financially of Richmond Council. We hope you find it as interesting as I'm sure I will. So over to you, Catherine, and thanks for joining us.
Thanks, Anne. Good morning, everyone. And thank you for attending today's session to consult on the budgets of the Council for the year from April. I'm Catherine Burston, as Anne has introduced, and Alex will join me once I've gone through a few slides for you all. So next slide, please. So why are we here? We're currently setting budgets and the council tax for 2024-25. And as with all boroughs, we are required to consult with our business ratepayers before doing so. These budgets will get final formal approval at the council meeting on the 5th of March, so not long to go. So thank you all for being here, which is a really important part of our process for setting budgets. If I can just go on to the next slide, thank you. We're proposing to spend £320 million in the year from April on revenue, and revenue is our day-to-day service expenditure. This is divided up in this pie chart into our main service areas, and you can see that the majority of our spend is on social care, which is a total of 55% of our budgets across adults and children's services. This includes providing mental health support and services for our clients with learning disabilities, as well as assisting older people and public health services within our adult social care, as well as supporting children in our care and those with special educational needs. So that's the largest of our pie chart there in pink and grey. Next slide, please. How do we fund this? So the majority of our income is from council tax, the red slice shown as 50% on this slide. That's a significant sum, and we actually receive really low levels of government grants compared to our other boroughs, as you can see by the small grey slice, only 1%. The reliance on council tax as the biggest funding stream has been acknowledged by government this year, where Richmond has for the first time benefited from a funding guarantee grant to ensure that our grant funding increases by at least 4% compared to last year, which without this extra allocation of grant funding, it wouldn't. So, and 4% is a long way below recent inflation levels, as you're aware. Business rates from you guys makes up 8% of our income, so that's the yellow slice, and we actually have to give 20 million plus of what we collect over to the national pot for a wider redistribution across the entire country. So that's revenue spend. If I can move on to capital, to the next slide, please. Thank you. So we're proposing to spend a total of 186 million over the next 3 years. You'll notice from this pie chart, the largest chunk in purple is actually within the remit of Finance and Policy Committee, which includes property. So that's the biggest chunk within there. For example, the long-awaited redevelopment of Twickenham Riverside within the budget figure at a level of £45 million, plus Ham Close and LRA Hall schemes. They're all providing community benefits such as outdoor space and new affordable homes within the borough, alongside a £12 million property acquisition programme that we started last year to ensure that we have sufficient council housing within the borough. We've also got significant investment in budgets to maintain our roads and pavements and wider infrastructure assets, including recent investment in Teddington Footbridge across the river, where a lot of work's going on. That's within the transport slice. We're obviously keen to progress our decarbonisation programme with investments specifically in more efficient lighting in council assets and in street lighting. And we've got a wider pot of funding for further climate initiatives. And these are all included largely in the environment section on the pie chart. Next slide, please. The majority of our capital is funded from our own receipts and grants, contributions, or borrowing. Big chunk there of borrowing, and when we borrow to fund our capital projects, we actually incur revenue costs to finance that debt in terms of the interest and the repayment in the same way as anyone does for taking out a loan. And actually, every £1 million borrowed adds over £90,000 per year to the revenue costs that have to be covered by council tax at current interest rates. That's 90 grand a year, and that would therefore appear in that first pie chart I talked about at the beginning of the presentation. So significant investment across the borough and costing us a fair chunk of money. But what happened next year? On the next slide, thanks. So the budget in 2022-23 did underspend, largely as a result of actually finally recovery of parking income after the COVID pandemic compared to what we provided for. So we have actually suffered from change in behaviour where people are no longer using their cars to get to our high streets potentially and not paying for parking. We assumed that would be a bigger cost to us in 22-23 than it actually occurred at the end of the year, giving us a bit of an underspend. And we also had some late government grants at the end of the year, which contributed to a small underspend. We've got significant sums of cash at Richmond, and we generated improved treasury returns because we proactively invested that cash to generate better returns as the interest rates rose. So the combination of those three things largely enabled us to invest actually £1.5 million set aside for further public realm initiatives across the borough for future investment. And a further 400 grand was set aside to spend in this year, in 23-24, on boosting the condition of our roads and pavements, and that's underway. During the year in 22-23, sorry, back a slide, thank you. In 22-23, we received government grant to support the Homes for Ukraine scheme, which was used in that year to fund costs associated with the support that we gave to refugees. But actually, because of the funding provided by government, that allowed just under 7 million to be transferred to a reserve to offset future costs on refugee and homelessness measures. And we're actually about to launch a Borough of Sanctuary programme to support our refugees, which draws from that pot of money, as well as ongoing additional housing and support costs for Ukrainian and other refugees, which will be continued to be funded from that reserve, that grant that we receive from government. So that's put aside in a pot for us to draw on in the future, specifically for homeless and refugee initiatives. In year and since then, we've continued to use the £3 million we set aside to support residents during the cost of living crisis, which we mentioned this time last year, and there'll be a slide on that later in the presentation. Last year, we also maximised the use of the Household Support Fund, which totaled 1.6 million that we received from government, and we used that funding in full to assist our residents and businesses, including providing free school meals in the holidays and additional fuel grant payments for those in need. There's a risk over that funding in the new year, which I'll come on to in a couple of slides' time. Also in 22-23, the school's funding shortfall in year was assisted by receipt of an early repayment of government grant that we have an agreement with government to help us to bring our schools funding back into surplus. So the latest deficit position is ahead of the plan position by 2 million compared to those original plans. So that's really good news that we're recovering that part of our funding pot. So overall, as a result of the underspend last year, reserve balances went up by 6 million, largely reflecting that Ukraine grant that I talked about, less what we've spent on cost of living measures funded from our reserves. So we now have 66 million pounds in what can be called as general reserves, which can be used to help balance our budgets. This is, for Richmond, it's a reasonable level, but by no means at the level of most London boroughs, actually. Although some boroughs, as you will have heard, are struggling with their reserve levels, we're probably middle of the road, but in a healthy position in Richmond. Because we need to remember that reserves can be used only once, and once they run out, they're gone. The council has already approved the direct allocation from some of those reserved via cost of living programmes, and that's a planned use of those reserves, alongside the Borough of Sanctuary programme, which is going to be launched soon, agreed soon. And the council is also undergoing a significant change programme with initiatives also funded from reserves to draw on that money to ensure that we can improve our services and how we work going forward. So that will mean that those reserves aren't available for general use going forward. So within that £66 million pot, we've already allocated 9 million by the end of March this year, and approximately another 9 million next year. So we are planning to use those reserves to invest in our borough. So the next slide, please. What have we specifically had to address in the budget for 2024-25? The pressures we're facing are actually similar to what we spoke about this time last year. Last year we added £6.5 million for additional budget for adults and children's social care, but this year it's another 11.2 on top of that, and this is to cover additional children's placements, care market pressures and inflation, and mental health demand pressures that we're seeing as a result of emerging from the COVID pandemic, a significant increase in demand and complexity of cases in all those areas. Just to give you an example, actually, the average cost of a residential care placement is over £4,000 a week for an external placement, which is around 30% higher than last year due to inflation, that complexity, and the worsening market position. Additional budget has also been added in 24-25 for to fund the market sustainability and a fairer price to our adult social care providers, which has been funded by government grant, which is slightly larger than last year at 2.9 million. That's within that 11.2 additional budget added. We've increased our funding for homelessness, and that is at around £1.4 million. And we've also provided for further service pressures in our estimates of all areas of another £1 million as a contingency to ensure that it's possible to continue providing our statutory duty when we're faced with the increased costs that I've just talked about, just to make sure that we can fund those pressures. As you'll all know, inflation peaked at its highest levels for over 40 years in the last 2 years, and whilst it's currently reducing, and the latest CPI being 4%, the council is still feeling the cumulative impact of significant inflation remaining within our base budgets. The expectation is that inflation will continue at just under 4%, particularly in the social care market, and we're also experiencing inflation on and higher prices within our capital projects in particular. And finally, within these pressures, we do actually still have provision for the impact on COVID on behaviour change, we've still got just under £2 million compared to our budgets pre-pandemic in terms of the amount of income that we expect to receive, and those are within the services of parking and leisure that I talked about earlier. Next slide, please. So although we've faced those pressures, we're also proposing to invest in our services, and this slide just gives a few highlights of those areas that as a council we're investing in. So we're continuing the affordable housing programme mentioned previously and increasing temporary housing accommodation within the borough, and that was a £12 million capital programme that started last year. We're continuing to work to be carbon neutral by 2030, including in particular a programme of decarbonisation works and investment in energy management sustainability that I've also mentioned previously. Key infrastructure such as Teddington Lock and also parks, pavilions and community facilities at LRA, Ham and Witton, and they're all receiving significant investment. And again, mentioning the change programme. So it's an ambitious change programme that the council is embarking on to deliver the best services whilst making efficiencies, which includes a number of work streams within that and a lot of key programmes. And that includes areas such as reviewing our assets and how we use our buildings, IT technology improvements, and maximising external funding and working together to be a great employer. And the final point on that slide is mega skips, where we've launched mega skips across the borough to reduce fly tipping and assist residents who can't get to the tip themselves, and we've provided for that service. Next slide, please. So what's in our efficiency programme for 2024-25? So last year we talked to you about a phase 1 efficiency programme which delivered £5 million. This year we've added another 12 million of efficiencies to our budgets with little impact on frontline services. So this covers a range of efficiencies from making better use of our assets to streamlining service delivery and increasing our income. And in particular within that 12 million this year will be additional returns from our investment on our cash balances invested within our treasury team. We're reviewing our buildings to rationalise the estate, and at the same time we're saving costs by moving to the cloud for our IT services and investing in our data team to use and understand data to direct our support to where it is needed most. And that's key for us to make sure that we are providing the services that we need and we know that our borough needs. We continue to invest in LED street lighting to reduce our energy use alongside that decarbonisation programme. And of course, we continue to review procurement and contract savings. So what does all this lead to? On the next slide, please. So this is our summary. So the maximum in terms of council tax that we're allowed to raise in 2024-25 is as directed by government at 4.99%, which would be made up of 2% specifically directed for adult social care, plus 2.99% for the main element, the general increase. That's the same as last year. But even if we do that, we still need to draw from reserves to balance our overall budget, and a decision will be published this week on our proposal for council tax for the borough. The Mayor has increased his share of the charge by 8.6%, which, as you will be aware, is largely to help fund transport TfL costs. And at the same time as all this, we are ensuring the right support is available during the cost of living crisis for all of our residents and businesses. So that's the specific information about the council's position and budget, and I'll now hand over to Alex to discuss the wider economic outlook and business rates in more detail. Thanks, Alex.
Thanks, Catherine. So I'm Alex Wilson. As Anne said, I'm the Assistant Director of Finance covering revenue services. So I'm going to talk briefly about the economic outlook, about some of the business-related initiatives that form part of the Council's cost of living programme. I'll provide a brief summary of the key changes to business rate charges for 24-25, and also look at some of the wider work that the Council's doing to support businesses in the borough. Next slide, please. So, in terms of economic outlook, there remains a significant impact of inflation, as Catherine's alluded to, and also with the cost of living crisis that continues to impact on the wider economy. Any suggestion that we're anywhere near the end of the cost of living crisis simply because inflation hasn't fallen this year, it really is incredible. Inflation levels remain high, and demand for crisis support from our most vulnerable residents this year has been at unprecedented levels. So, really quite worrying. We don't know what's ahead in terms of revised funding from the government. They've pushed back on the fair funding review to the next Parliament, and that includes levelling up, which we know is going to take a lot of money away from London. We're also waiting an announcement about whether the government will continue to provide funding through the Household Support Fund from April. This is a substantial amount of funding that's given to councils to help support really vulnerable people during the cost of living crisis. Whilst announcements in the autumn statement, such as uplifting of benefits and state pensions or the increase in local housing allowance rates, will provide some really important additional support to households from April, these don't replace Household Support Fund, which provides support to a much wider group of individuals and households in need. This includes support to households who are really struggling or they're already in crisis, many of who've got rising debts and have used any reserves that they may well have built up over time. In terms of collection rates and business rate arrears, the in-year business rate collection performance is 91%, which shows continued improvement, up 1% compared to this time last year, and 9% when compared to the end of January 2024. Business rate arrears total 9.2 million and have risen slightly in comparison with last year, an increase of 0.2 million, although it is 0.5 million less than 2 years previous, so definitely moving in the right direction. But I think this reflects the business rate team's focus on maximising the in-year collection rates and giving businesses longer terms to repay previous year's arrears. We absolutely accept that the effects of the pandemic continue to be felt across the business community, and the cost of living crisis has added further pressures. So we feel that this approach will provide a better longer term outcome, and we're really committed to work with businesses to assist them as much as we can in this area. Next slide, please. As Catherine's already mentioned, the Council has committed £3 million to a cost of living programme from its own reserves to fund initiatives to support residents, communities and businesses through the cost of living crisis. Specifically, in respect of support to businesses, there are a number of key initiatives in place that I just wanted to share with you. The first is the Shop Local campaign. That's continued to run to support businesses to continue trading through the cost of living crisis. The project actually completed at the end of December 2023. The campaign took an approach to encourage residents to shop locally, signposting them to visit the Visit Richmond webpage, where they're able to filter through local businesses available to them, highlighting events and opportunities to help them to shop locally. The campaign had a consistently high rate of engagement with digital advertising and actually performed above expectations, which was really promising. Well-performing messages have been those targeted at neighbouring boroughs to entice them to shop in Richmond rather than in their own boroughs, and messages about locally sourced and unique goods and buying goods from around the corner rather than waiting for deliveries also performed really well. The Small to Medium-Sized Enterprise Resource Efficiency Project, or SME, was run in partnership with Crew Energy, providing direct support and advice to small local businesses. That included things like site visits and audits to help the businesses be more resource efficient and to try and help them lower their energy costs. This project also completed at the end of December, just gone, but the council's extending this vision by commissioning, and that's run by Carbon Architecture, which will aim to support companies to become more sustainable and achieve carbon reductions, as well as lead to a level 1 accreditation of the Green Mark for businesses in Richmond. So really, good programme for businesses to be part of. And the council's community spaces that you'll all remember from last year, warm spaces have been replaced by community spaces, extending the council's offer through the council operated and voluntary sector funded spaces to include not just a warm space, but wider support and signposting. So there's currently 48 community spaces across the borough, which are included on a directory which is on the Richmond Council website. But given that many of these are located on or near high streets, we're hoping there's a potential co-benefit in greater footfall in those areas, which will hopefully help the businesses that are based there. Next slide, please. So there are a number of business rate changes for 2024-25, which I think are worthy of note and helpful to share with you. You'll all remember from the presentation last year, I talked about the most significant impact on business rate charges last year being the revaluation of business properties by the Valuation Office. As you know, the Valuation Office based their reassessments on market value, and they wrote out to all businesses in the borough to advise them of their revised rateable values and also their rights to appeal. Many of the businesses in the borough may well have taken that opportunity to appeal against those valuations. But it is those valuations that have formed part of the calculations for last year and also this year, and the charges for 24-25. But it's just important to remind you that that's not in the council's gift, and therefore if you would like to make an appeal, you must do that directly to the VOA. If you think your rateable value is wrong, then call the Valuation Office on 03000 501 501 to make a challenge. But also very important to take away from this is that you need to remember to pay in the meantime. So you have to pay your business rates charges whilst that appeal process is ongoing. Otherwise, the statutory recovery process will begin. So really important to remember to pay in the meantime whilst it's sorted out. Business rates legislation has been updated to enable the decoupling of the standard multiplier and the small business multiplier, which means that one can be increased without also having to increase the other one. This has meant that for 24-25, the small business multiplier will remain the same for the 5th year running, so it won't go up, but the standard multiplier has increased by 6.7%. Now, we actively encourage businesses to apply for relief, and we always check accounts are in receipt of potential relief before enforcing payments. So if you think you're eligible for the small business rate relief, then please do make an application. Relief for retail, hospitality and leisure sector will remain the same as it was last year at 75%. So that means that qualifying businesses will only pay 25% of their business rates, and relief will be applied automatically. A new relief is also being introduced to support businesses making improvements to properties that they occupy. So from the 1st of April, no ratepayer will face a higher charge for rates for 12 months as a result of qualifying improvements to their property. And this scheme will be again processed by the VOA and not by the council. Next slide, please. So finally, I wanted to cover some of the wider work that the council's doing to support businesses. We work really closely with the business improvement districts, or BIDs, and local business associations to promote local centres and independent businesses. As already mentioned, the council supported a year-long Shop Local campaign with a monthly focus on individual centres, offering marketing and awareness and raising opportunities for local businesses. Catherine mentioned the £4.5 million Public Realm Improvement Fund. That's putting resources into repairing the wear and tear that some parts of the borough suffered during the pandemic, as well as funding improvements to high streets and town centres that, as we know, are really important to encouraging local visitors. Many projects are being worked up with business input, and the first round of schemes are nearing completion, and that includes East Twickenham and Hampton Hill. And we're looking forward to work starting in Teddington, Powder Mill Lane and Castleknow. The Zenith Enterprise Programme is the council's new business support service and successor to the Phoenix programme, which you hopefully have heard of. And this has been launched and is now open for business. This supports enterprise from pre-starts through early stage to scale up. And the aim is to support our small businesses through what we know are really challenging times and to take advantage of the opportunities that the borough has to offer. If you're interested in this programme, you can find out details on the Richmond Business Hub. The hub brings together a range of other support and advice and acts as a gateway for local businesses to find the right support for their needs. So a really important resource for businesses to tap into. As previously mentioned, the Green Business Support is also available to local businesses now. The council has commissioned Carbon Architecture, as I said, to provide that support and advice and assessment of company environmental performance. Further details again are on the Richmond Business Hub. The council has also set up a task force to develop a tailored employment skills strategy. The strategy has a number of key objectives. The first is ensuring that those impacted by the cost of living crisis in Richmond have access to sustainable jobs and appropriate learning to upskill. We absolutely recognise that in terms of improving the longer-term household financial position for those particularly vulnerable households we have in the borough, getting people back into work is absolutely crucial. So this employment and skills strategy is really important to kind of help us move forward with that. The strategy ensures that employment and skills provision for refugees in Richmond is coordinated and based on the needs of communities. It explores the council's role in the procurement of services to ensure that social value commitments around employment and skills are included in specifications. It aims to work with the South London Green Skills Academy to ensure that skills delivery is mapped to employers' needs for the green jobs that are available in the borough. And finally, supporting local businesses to hire talented local staff and ensuring that skills provision meets the needs of those employers. So work, as I said, really important part of kind of becoming more sustainable for, as a borough. And for the individuals that live here. Richmond Work Match is the council's job brokerage service, helping local people into work and local employers to find staff. It will be hosting the Employ Richmond Job Fair on this Friday, 23rd of February, at the Exchange opposite Twickenham Station. So This is hoping to build on the excess of last year's event, which attracted over 450 local job seekers, which was well ahead of any expectations that the council had, and was a really, really positive event. And last but not least is something which I hope you are all aware exists, and that is that the council has invested in its buildings at 42 York Street to develop a community-focused enterprise and innovation hub called Patch Twickenham. This levers the work near home concept to bring new employment and enterprise activity to the town centre. The new space is accessible and affordable, with some places reserved for Patch scholarships, new startups and entrepreneurs from non-traditional backgrounds. The ground floor has an event space, podcast studio and a cafe, and recently joined by the borough's first Library of Things, which is a really interesting concept. This allows people to save money and reduce waste by sharing common items that may only be used every so often, rather than buying new. If you haven't had a chance to go in and have a look, then I would encourage you to do so. As we know, businesses are demanding more flexible and affordable workspace, and the move to home working appears to be changing the structure of the local market. Patch is part of a growing network of similar workspaces in our borough. The council sees flexible workspaces being a really important facilitator of high street renewal as demand for retail space falls. So a really important new concept that the Patch Twickenham brings. So thank you very much for giving Catherine and I the opportunity to speak this morning. We really value our relationship with the Chamber of Commerce and the wider business community, and we're really grateful for all the valuable work that you do. We hope you found that useful, and I will now pass back to Anne.
Thank you very much indeed. That's Catherine Burston, Assistant Director of Financial Management, and who's just completed her presentation, Alex Wilson, on financial revenue services. So thank you very much to these two senior executives from Richmond Council in taking us through a really fascinating and very comprehensive view on everything with all the detail that we require. I just have one question one comment which encompasses three parts. You spoke, Catherine, about, and both of you actually, about the reserves, the financial reserves, and you mentioned, I think, if I understood correctly, and you can correct me if I'm wrong, that there would be 9 million taken from that and not this year and 9 million next year. I presume that you will make up those reserves in other ways by bringing income in. The next point was the electrical charging. You haven't mentioned that vehicle electrical charging, I don't think. Forgive me again if I'm wrong, but could you just give us a very short overview on that? And the reserves, the reserves, the revenue from parking was the other aspect. So there are three. The revenue from parking, is that still strong? Because I know that's a very important part of the financial income. Investment in electrical charging and the reserves, they were the 3 points that I think our business community would be quite interested in the presentation. So please, either of you take the floor on that. Both.
Thanks, Anne. I'll pick up your first point on reserves. You're absolutely right. The plan is to draw down approximately 9 million this year and 9 million next year from reserves. That does actually mean that we are reducing our levels of reserves. So, and we're using them to fund council tax each year. So at the moment, the efficiency programs and the plans that we have in place will work to improve our budgetary position in the future, but at the moment we are drawing from reserves to fund specific investment in the borough rather than planning to top that back up right now. Your second point on electric vehicle charging, there's a significant programme to continue that across the borough. I don't have the figures off the top of my head, but please be assured that we are investing in charging points. And Alex may be able to pick up more on parking.
Yes, I think Catherine already mentioned in her presentation about how the recovery of the position in terms of parking income was better than we were anticipating, and it's definitely following the same trajectory. Parking income has increased significantly since the COVID period, which is positive. Obviously, there are less people visiting town centres, so we know there's an impact on parking income from that perspective. But we are about to commence a full, more detailed review of our parking service, which will include looking at things like parking income and whether there's anything that we can do to improve the way that we operate, which might, obviously have an impact on how much income we're able to generate, as well as making efficiencies in how we in our processes and systems.
Thank you very much indeed. Thank you. That covers everything from our perspective. I have to say it was a very good review, really excellent review on targeted. Well, what I got from it was that the management that you described is targeted, it's efficient, it's focusing on value add as well, least impact on the customer, on the residents and the businesses, but you are actually managing, you continue to manage the finances in very well. So this will be incredibly reassuring to our business community. One thing to mention, well, firstly, thank you for your support of the Chamber of Commerce. We value that, and the business community definitely believe you support them. So be clear on that. So that's a very strong message from us. We feel that you do support us. And we thank you for your support of the Chamber of Commerce, obviously, the awards, the office, and everything else you do for us. So we're very grateful indeed. And we'd love to have you at a couple of our events. If you would like to come along, that would be wonderful. And if there are any comments along the way, I will revert back to you. We'll make sure that businesses get sight of or get a chance to watch this. Those that didn't attend, make sure that, and I will put something in press as well, so that they're aware of how well where you are managing the resource of the borough. So on behalf of the business community, thank you for all you do. And I know Susan is listening from the council as well, Susan Shaw, and we thank Steve Diamond and Susan and all the team, Lorinda, for all they're doing to invest into the borough and keep our high streets alive and support our small businesses. So thank you all very, very much. We appreciate this morning's update. Thank you.
Thank you, Anne.
Thanks very much.